Hello and happy Monday or whatever day in the week when you are watching this video. If you follow the financial markets, you will have noticed that much of the content on changes over time in the price of gold, silver, fiat currencies, cryptocurrencies, stocks, you name it, presents that change from a US dollar perspective. For example, what was the price of a barrel of crude oil or an ounce of gold at the end of 2023 and what is it today? But given that many people who follow the financial markets and perhaps invest or trade in these markets do not operate primarily in US dollars, it is sometimes useful to also look at changes in your own currency. And since I am based in a country where the euro is the official currency, and at the end of the day I operate mainly in euros, in this video I look at changes in a range of subjects and groups of subjects in the financial markets in euro terms. My name is Jimmy Lepping. I'm a psychologist and statistician with an interest in a wide range of topics that have to do with human behavior and predicting human behavior, including the financial markets. And in this video I look at how the price of gold, silver, a range of currencies and cryptocurrencies, as well as dividend adjusted stock prices have changed in euro terms since the start of 2024 and since the very start of August this year. That is, I look at the percentage of difference in euros in the price of gold, silver and the other subjects that I just mentioned between last week's market close and the close of 2023, as well as between last week's market close and this year's July market close. In other words, today's price action from Monday the 21st of October 2024 is not yet included in the charts that I'm going to show. So in this first chart, we see a total of 42 financial market subjects represented as small colored dots in terms of horizontally the percentage change 2024 year to date, and vertically the percentage change over the past, roughly speaking, 2 months and a half, namely since the very start of August this year. The thick dashed lines are at 0 or no change, whereas the thin dashed lines represent the median change of 2024 year to date and over the past 2 months and a half respectively of this set of 42 subjects. So let's have a look at some of the subjects in this chart. To start, we see three common fiat currencies or paper currencies, the US dollar, the pound sterling and the Swiss franc, more or less at the center of the chart in the sense that movements are relatively close to zero and not that far from the medians compared to the vast majority of the other subjects in this chart. This is not to say that these differences in currencies are meaningless. For example, while the euro remains the most important currency for my financial transactions, a considerable part of the professional services I offer are delivered with fees established in US dollars or Swiss francs. So from that perspective, a relatively strong US dollar or Swiss franc means that these services will give me more income in euros. Yet at the same time, there is a tendency towards a somewhat negative correlation between the US dollar strength against the euro and stock prices expressed in euros, meaning that a temporary upward movement in the US dollar against the euro is often accompanied by a somewhat of a downward movement in stock investments expressed in euros. And of course, even when dealing with a small percentage of difference in US dollar versus the euro, the larger the sums of currency involved, the larger the absolute difference in actual dollars or, in other cases, actual euros or Swiss francs will be. But it is important to note that the fluctuation in these common currencies tends to be considerably less than in other groups of subjects, as we will see in a minute. And although this chart focuses on 2024 year to date, you will be able to find similar patterns when taking periods further back in the past. And when we compare precious metals with the paper currencies that I just discussed, well, we tend to see movements in favor of these precious metals. That is, the gains against the euro of these precious metals have been, of course, clearly stronger than for the gains of the US dollar, British pound, or Swiss franc against the euro. This holds especially for gold. Basically, every time when people lose confidence in paper currencies, we see a rise in the price of gold. But when silver moves, when it does, it can move quite fast. And well, over 2024 year to date, these two metals have thus far performed very similarly. Clearly up year to date, and also fairly clearly up since the closing bell of July. Now, when we look at the three of the most important cryptocurrencies, we see a more divergent picture. We see that Bitcoin, Ethereum, and Binance are all three up year to date, but Ethereum, which is ETH, is clearly down over the past 2 months and a half, while the other two are kind of flat over this more recent period. And all the other dots in this chart represent different European large and mid-cap stocks from a range of industries which will become clear in a bit. A first important observation with these remaining dots is that they are very dispersed, with some stocks performing very well and others performing very poorly, which is exactly why many successful investors in stocks try to diversify by including different industries in their portfolio. One industry which 2024 year to date has clearly underperformed, and I already signaled that underperformance in videos this summer, in which I also warned that more downside could still be on the horizon, is the industry of semiconductors. In this circle here, or oval shape, you see 5 large cap semiconductor stocks that I also addressed in the aforementioned videos this summer. ASM International, ASML, BE Semiconductor Industries, Infineon, and ST Microelectronics. Of these 5 stocks, the only one that remains positive year to date is ASM International, and when looking from the July closing bell, even that one is down. It is likely a combination of factors that are contributing to this downward pressure on semiconductor stocks, including possibly somewhat exaggerated expectations around AI related needs, which is not to say that AI is a hype or a bubble, but it may simply not move as fast as anticipated. Then also export restrictions to China, ongoing developments around Taiwan, and perhaps also some uncertainty regarding the extent of a possible economic slowdown in Europe and perhaps more widely. Now, let's have a look what the performance of different groups of subjects looks like. So in this chart, the 42 subjects from the previous chart have been reduced to 10 groups based on their theme or industry, and these are average movements for each group, as if someone had invested equal amounts of money in each subject in the group since the start, or just at the start of the indicated period. Of course, based on what we saw in the previous chart, it is of no surprise that we find the group of common fiat currencies, US dollar, pound sterling, and Swiss franc, relatively centric. Next, we find, also no surprise, gold and silver clearly outperforming fiat currency, both on a year-to-date basis and over the most recent period. And also, as kind of seen already in the previous chart, although with more dispersion, but when we take the average of the three cryptocurrencies, we see that, well, there is on the one hand a clear positive performance year to date, but there is actually a slight underperformance since the July close. And as we discussed, also the semiconductor group, which has, also been underwhelming when it comes to performance. Personally, I think more downward pressure is in the cards. This is no investment or trading advice, just my personal opinion. But in any case, of all the groups included in this video, this one has shown the worst performance since the July close. Then a group of stocks which includes BMW, Daimler Truck, Mercedes-Benz Group, Renault and Volkswagen. So basically 5 stocks in the business of trucks, vans, cars, in short, automotive. That on average is more or less flat year to date, but visibly down since the July close. Seems that for this group of stocks the headwinds are not over yet either. Next, a group of stocks which had a very good first half or so of 2024 with either gradual or fairly sudden moves up, but as a group is close to the point where it was end of July. And already in an earlier video, I think sometime September, I showed that the upward movement in energy stocks seemed to be coming to a halt, and some other groups started to show relatively better performance. And a fairly similar pattern we see for banks. Insurance stocks I did not include in this video because their performance tends to be fairly similar to that of bank stocks. And basically here we also see, like for energy stocks, a combination of clearly up year to date, but about flat since the July close. Seems that for this group of bank stocks too, the upward movement has lost steam. Next, a group of consumer staples stocks, that is stocks from a consumer segment that has a relatively stable demand, at least when compared to more cyclical companies, like for instance the food delivery companies, which we will see in a minute. So in this group here of consumer staples, we have AB InBev, Ahold Delhaize, Carrefour, Heineken and Unilever. And compared to other groups, this is typically not the most volatile one. And well, for this time window, we see modest gains both year to date and since the July close. Then penultimate, one of my favorite groups of stocks, that is metals and mining. Here we find Acerinox, Aperam, ArcelorMittal and ThyssenKrupp, which have in common their focus on steel and steel products. And this group also includes AMG or AMG Critical Materials, which is active in among lithium, vanadium and other critical materials. For this group, we may be dealing with a reversal that's kind of in the other direction than what we see for the energy and bank stocks, because for energy and bank stocks it seems that the period of upward movement came to a halt and we are now seeing more mixed or sideways movement. Whereas in the metal space, metal and mining space, we are seeing a period of relatively stable movement after a period of clear downturn. That was also included in my previous video where I talked about energy stocks, the one I think from September, the one that I mentioned a couple of minutes back. And well, of course, these dots represent averages, and these are groups of subjects. And for this specific group, Acerinox or ACX and ThyssenKrupp or TKA are down also since the July close, whereas the other 3 companies, Aperam, ArcelorMittal and AMG Critical Materials, are up in that last 2 months and a half. So it seems that at least for some of the companies in this group, prices are kind of bottoming, and it will be interesting to see if the recent mild gains will be continued. And finally, this is an interesting phenomenon for me, and well, not really something that I expected, honestly speaking. In this group of consumer discretionary or more consumer cyclical stocks, we see considerable uptrend. In fact, the only deviant stocks in this group to the downside is TKW. Y, or Just Eat Takeaway, which is down on both time dimensions also since the July close. But as a group of four, so we have here Basic Fit, Delivery Hero, Just Eat Takeaway, and Zalando. Basically three food and or product delivery companies and a company in the fitness business, we see solid moves up. And while this is interesting, among others, because it does not correspond with the idea of a broadly shared expectation of a recession. Because if we were to have such a broadly shared recession fear, one would expect consumer cyclicals to underperform consumer staples, because the consumer cyclicals are about products that, well, many people could more easily leave or postpone for a while if needed. For example, a gym membership or a food delivery service, and compared to many of the products that are part of the daily routine and are therefore needed anyway. So, if there was a broadly shared recession fear, we would for that reason expect consumer staples to outperform the consumer cyclicals. Yet over 2024 thus far, we see the opposite, a clearly better performance in the cyclical group than in the staples group. Anyway, I think this is a nice moment to let this video come to an end. I hope you found it useful. If you like this kind of content, you can find plenty more of it on my YouTube channel, in English as well as in a range of other languages. If you have any questions or suggestions for future videos, feel free to leave a comment below this video or get in touch via the email address listed in the description of this video. And for now, thank you for watching, thank you for listening, and I hope to see you soon on this channel again.